over the currency wars and the race to the bottom, as many call the moves by Japan, Brazil, and other countries to weaken their currencies. With me now is Nick Bennenbroek. He's the head of currency strategy at Wells Fargo. His group is a Bloomberg best in currency forecasting. Nick, good to have you on the set this time.
Good morning.
Okay, so by the way, do you even agree that we're in a currency war situation or not?
Well, I wouldn't call it a war, but we're certainly in a tense situation, or at least there's heightened tensions in the currency markets.
And what started this? What was the trigger? Is it the dollar or what?
Well,
or the Bank of Japan?
I think it was possibly the weak dollar. Typically over the last several years, you have had countries that have been active in terms of managing currencies. But perhaps what's unusual now is that not only is it Asia, you've also got some of the Latin American countries, worried about the dollar. And then over the last couple of years, you've seen both the Swiss National Bank and Japan intervening in currency markets. So
right,
it's somewhat unusual to have many regions of the world all looking at currencies all at the same time.
Okay, so in the 1980s, when we were having problems with currencies, we had the IMF come in, and there were all these currency accords and that sort of thing. This time around, we've got the IMF, the World Bank meeting over the weekend. Could we see anything like a currency accord come out eventually?
I don't think so. We saw the IMF official yesterday saying it doesn't look like there's going to be a currency accord. And when you look at the various kind of statements from the important players, there is enough distance between the positions that it's going to be hard to get everyone to agree. I mean, for example, you've got China looking to resist a very large appreciation.
Right.
You've got Japan intervening, and then you've got the US looking for some more flexibility. I think the sides are so far apart that the chances of an accord are quite low.
Okay, so then what are we going to end up with? A developed and a developing faction going on then, or what?
I think we're probably going to end up with something quite similar to what we have now in terms of differing opinions. We'll continue to see, I think...
Just opinions?
Differing opinions, and we'll continue to see, I think, increased maybe currency management from some of the Asian countries and from some of the Latin American countries as well. Those currencies will probably keep going up, but they'll probably slow the rate of gain.
Slow the rate of gain.
With their intervention activities.
Okay, but the Europeans? Hands tied.
Europeans, I don't think they're going to do anything. And although we heard some comments from Tricia yesterday starting to talk a little bit about currency markets, I think they're not overly concerned with the euro at the 140 level. It has been to 150 and 160. I think they're still on the sidelines.
Okay, but if it gets to that level, though, doesn't the pressure then rise on the U.S. to do something about their weakening dollar?
Well, yes. U.S. is interesting because it's been a very long time since the U.S. has really been actively intervening in foreign exchange markets. You probably do have to go back to the 1980s when it was part of one of those accords. So
right.
I believe actually the U.S. policies are going to be very much domestically focused. I think even if we got to the 150, 160 level, I'd still be surprised if we saw foreign exchange intervention by the U.S., by the Fed.
Okay, but you're not ruling it out? It could happen?
It could happen, but it's a low probability. Again, I think these sides are far apart, and really we're going to have increased comment, but overall I think not much change in currency management by the various authorities.
Basically overwhelmed by what's going on, by the currency forces, the free market forces. Okay. Nick, thank you so much.